In this presentation, we will record investment activity for the month of January into our personal QuickBooks account. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on our home page. We currently have the open windows open. We can open the open windows by going to the view drop-down and selecting the open windows list. We're now going to go to our financial statements, to our balance sheet by selecting the reports drop-down, going to company and financial, scrolling down to the balance sheet standard. Changing the dates up top from the customized reports, we want to change the dates from 01/01/20 to 12/31/20. That's January through December 2020. This should be 2020 in the current year that we are working on. So January through December. We'll change the font sizes while we are here by going to change fonts, make it 11 and OK, yes, and OK. So here is our information. We entered this data in as of the December before the current year that we are in, and then we had one update to the IRA, which was our investment of another $1,000 in January. If we look then at our January statement, here is our January statement. We're going to need to make some updates to this information given that fact that we're on the market value. So we need to update to the market value. So, and we're going to do this just as a group so that we got the total mutual funds. Here's the market value for all of them put together, the total bonds, and then the retirements. So that's what we'll end up doing here. We need to make these market values the same as of the end of January. So all we're going to do is we're going to take a look at this and say here's the 28,644 is the market value that we want it to be. If we go back over here, we're going to say minus the 28,353. That means that we have a change of $291. So we need to change this by $291. Now we can't really do that in the register again because the register, there's no cash affected. So we can go to the register for this account then. That's how we're going to do this. We're going to go to do that by going to lists drop-down, chart of accounts, and then we will go to the investment mutual funds. And within the investment mutual funds, we'll make this as of 01/31/20. And we need to have an increase or decrease. This is going to be, we need to make it 28,644, so it's going to have to increase to go up, so that 291. And then here's the question, what's the other account that we need to hit for it? We haven't really realized this gain yet. So if we put it on the income statement, then we're going to record net income increasing even though we haven't really sold the stock and we haven't realized it. So now we've got the question of, do we want to record it as a realized gain on the income statement or somewhere else so it doesn't affect our income statement? So one way we can do that is that we can put it to the equity account, again, since it's not realized. And we typically, if we use this method, set up a different equity account. And so I'm just going to make a new account for now and call it Equity Unrealized Gains and Losses. So we'll just type that in and then say tab, and we will set it up. It's going to be not an expense account, it's going to be an equity account. So we'll hit the drop down, we're going to look for an equity type of account, This will be the name, save and close, and then we'll record that. And yes, and there it is. So if we close this back out then, and go back to our financial statements, back to our balance sheet, now we have this recorded tying out to our financial statement so we can see that our assets are currently what we think they should be on a market value basis. We can't see the cost versus market value, which could be useful information, but we get, it's just how much information do we want to have. And then if we go down versus the time that we want to put into getting it, and then we have the other side in the equity section. So it increases our net worth, but it doesn't do so by going through the income statement. And so if I look at the income statement and look at how we're doing, because oftentimes people want to look at the income statement for budgeting purposes. And this, if I have a lot of gains from our investment, doesn't really help with my budgeting because it's not like income that's going to be cash that I can depend on to spend or whatnot. So this is one way to adjust the financial statements without kind of messing up my normal income statement with the gains and the losses by just recording it to equity, a separate equity account that we can then track. So I'm going to do the same thing for the bonds. Bonds are at 3123. If we go back to our account here, they're at 3112. So the difference then, if we subtract this out, we're at 3112 minus, then we're going to go back to this statement. And this one is the minus the 3123. We have to increase it by $11. And bonds don't change all that much, so it's $11 change that we have here. So we're going to go back over here, same method. We're going to go to our chart of accounts. We're looking for the bonds investment account now. So here's bonds. We'll double click on that. Here's our register. This is as of 01/31/20. And we're going to have an increase of $11. And then the other side, I'm just going to take to that same equity account. We're not going to have an income account. We're just going to take it to that equity account, unrealized gains and loss, and enter. That's not spelled right. We'll say save. And so I'll close this back out. Let's go ahead and rename that equity account while we're here. So we'll go to this equity and right click and edit. And let's take the E off of that. I think I was going to say losses, gains and losses, maybe. Oh, I see why it doesn't let me add an S. Okay. We'll keep it at that. Or we can delete the space here and maybe ES. So a couple things we can do there. We'll go close this back out. And then we could say this is 3123. So now we've got the 3123 matching out. And again, the other side being going to the equity. So equity is the other side. And then we'll do this one more time for the, what do we got next? The retirement account. So the retirement account is now at a market value of 21125 minus, and if we go back to QuickBooks, the other side of the equity is going to be minus the, the IRA, the 22002. And so that's 877. And it actually went down, it looks like. 21, 22, yeah. So that could happen. So now we have a loss, but the method, it will be the same. We're going to go back to our chart of accounts, and we're going to go to the IRA investment, double click on it. And this is going to be as of 01/01/20. We'll make a decrease. We're on the decrease side this time, 877. And then we just need the same account. I'm just going to put it to the same account, whether it be an increase or decrease, because it's an unrealized gains and losses. So we'll say that's the one. Enter. And then if we go back to our balance sheet now, we've now matched this up to our current financial statements. So now we've got the 28, the 3123 and the 21,125. So the 28,644, the 3123 and the 21,125. And if we double click on that activity, we see this adjustment that we made in January. If we close that back out, if we take a look at the bonds, we'll see the activity that we made in January. And then if we look at the retirement account, note here that we had the activity that we put in place and we had this 1,000. And when we don't track the cost, we can sometimes, it's harder for us to see our investments that we put in place, because the investments note showed up, the cost changed from 15 to 16. So we picked that up because we entered the cost as we entered the data. But just note that if you're buying and selling the stocks, then you got to note the amount that's going to come out of the checking account that increased the cost versus the amount that was due to an increase or decrease in the activity. So we had already recorded the cost side, which was included in it, and then we went back in here and recorded the change in the activity. So that's going to be this item, and that's going to be the recording. We're back up to date, no effect on the income statement using this method. For more accounting information and accounting courses, visit our website at accountinginstruction.info.